Presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. We've assembled a great group of people. They're all great technicians. And I'm so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 32, NASDAQ down 17, S&Ps are flat. Gold contract down $12.60, traded $1,195 an ounce. Silver off 80 cents at $15.76 an ounce. Platinum down 13 at $1,195 an ounce. Copper off 2 pennies at $2.87 a pound. Light sweet crude flat at $55.94 a barrel. Bonds. The ever-ready bond market, folks, is amazing. You get the 10-year up 12 ticks at 127.20. The 30-year up 24 ticks at 145.27. In fact, the 30-year took out the October 15th high, folks. It looks like it's going to be an ABC structure in the way up that actually is going to blow away the 2012 highs in the bond market, which is just amazing. King dollar. King dollar down 392 ticks, trading out at 88.29. The euro up 53 at 124.90. And the yen down 60 at 117.22. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Volatility in spades out here, folks. We had a 40-point price spread in the S&Ps today. S&Ps got up to a price point of 2016, gave it up in spades. Bottom line, S&P is working its way down to 1820. Right now, you're at 1990. Dow Industrials, same setup in the Dow Industrials. We have a 374-point price spread out here today. The high was 427, 17,427. Right now, we're at 17,207. You're up 26 bucks. Bottom line, this is just setting up a monster ABC structure on the way down, bringing that baby into the 15,800 mark. NASDAQ Composite, same setup in the Composite. Composite got to a price point out here today of 46.45, and right now you're at 45.89. None of them can hold price. IWM followed right along, the Russell 2000. Russell 2000, the IWM got to 115.34. You're trading at 114.25 right now. Same type of setup. Gold market. We go over to gold. We take a look at gold. High volatility in the gold market also. The gold market, the low today in the gold market. Well, first off, the high was 12.23. 12.23, you hit at 0700 this morning. You got down to 11.87. That 11.87 got hit at 10:40 a.m. Right now, you're at 11.94. We've done 218,000 contracts. Gold market is going into its sign of strength from December 1st. That had 342,000 contracts. Bottom line, gold still wants higher price. Why? Let's go right to King Dollar. King Dollar, folks, okay, has come off its highs with volume. What we have out here today, King Dollar's down 392 ticks. We've been down 700 ticks. We've done 55,000 contracts. So you're coming off the high with an expansion of volume out here. We'll see how it attacks this 87.45 number. Right now you're at 88.29. Bonds. The bond market has been screaming for quite a while that it continues to want higher price, lower yield, and it's doing it in spades. It's just pretty amazing, actually. You know, the October 15th swing high seemed a long way away when we basically, you know, October 15th it spiked up to 146.16. Then it pulls all the way back to 138, and that, for the bond market to move 9 points, 8 points like that is almost unheard. It is unheard of, folks. That's the ball. But guess what? We're up there. We're up there with volume. We hit 146.19 today. 146.16 is the high. And if you bring this on a continuous contract, the way this baby's set up, number one is that I'll bring this back, and when you see this, this is just crazy. But guess what? This is what we have happening, and you never know what is going to cause fluctuations and volatility like this, but I suspect we're going to get into the currency deal here, and it's the currency that's doing it. So the last high in the bond market was July of 2012. That was 153.11. The way this baby's set up, folks, it could be could be a much larger ABC structure on the way up and just blow that away. Your 8 point here is 127.23, which was the low that was generated in December of 2013. Your high was that October high of 146, and it's a 20-point A to B, which would get you up at the 160 level, which would take you over that 153. So it is a very large number. Now, market-wise, what you have is this. The currency in Russia imploded last night. Okay, it's down 54% for the year. Last night, however, it went down 19%. Just to put this in context, okay, and if you don't think this is, well, the bottom line is it is serious, but if you don't think it's serious for other companies, countries, hedge funds, all of the above, folks, okay, we're going to walk you through this. Apple itself, we'll just start with Apple. Apple had to stop selling in Russia this afternoon, okay? Bottom line, why'd they stop selling? Because guess what? They don't know what to sell their product for. That's what it comes down to. Sales stopped, flat out. I want to bring you back to long-term capital, 1998. In 1998, folks, okay, the Asian contagion actually started in Indonesia. And what happened there is that everyone's sitting fat and happy in the United States, figuring that, no, it's no big deal. We watched it happen for about 6 weeks. Then what ended up happening is that long-term capital was on the wrong side of a trade, very large trade. Bottom line, they imploded. As they imploded, that almost brought down the banking system. Now, if you want to hear something really bizarre, this is how far we've gone from 1998 to 2014. They almost brought down the system, and that trade was, they only had to get recapitalized at $3.5 billion. Yeah, $3.5 billion almost brought down the system. Okay, so now, and just to recap that whole deal, bad trade, the Fed turned around, they didn't want to bail them out, they made 16 financial institutions bail them out. Bottom line, bailed them out, calmed things down. That was only $3.5 billion. The banks sneeze $3.5 billion now. So, the real key is going to be who is holding the bag, what banks are holding the bag, what countries are holding the bag, and where is the bag. So, in that context, what you're going to see is you're going to see monster volatility continue in all markets. If you want to see something that is absolutely wild, I will bring gold up. And if you know, Andy and I had been talking about the Russians buying cars. If you want to see something GCG5, I'm going to show you gold in ruble terms. And this is a total mind blower. You know, but it shows why gold is a great currency and shows why gold is a great insurance policy. In the last 45 days, in rubles, gold has gone from 49,389 rubles up to 86,000. Bottom line, what that is all about, okay, is that gold has gone up 85% in price. And what does that mean? What does that mean for the gold market? What it means in particular is this. It means that, number one, that's why people buy it. Number two, what that also means is that this crisis, folks, my take is only beginning, okay? This thing's not going to go away overnight. So what you're going to see, you're going to see more demand. The way that gold has been trading out here today, they're trying to slam it. Each time they're trying to slam it, the baby comes back. In the context of supply versus demand, my take is, guess what? You're going to see gold continue to have volatility, but to continue to move higher. I mean, it's pretty amazing. And I suspect there's going to be another shoe that's going to drop off somewhere. Because, see, the market itself, the bond market has been screaming it. The NASDAQ screaming it. The DAX in Germany, that came back today, but that came back after, the FTSE. Let's go to the FTSE first. The FTSE came right into the 2008 lows. FTSE out here this morning hit, 6144. That low is 6072. Bottom line is that you can expect high volatility. The October 15th swing low is going to get hit. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are up 38. NASDAQ's down 18. S&Ps are off. They're flat. We'll be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are up 37. You get the NASDAQ down 17. S&Ps are actually flat. And the NASDAQ 100 is down 35. So if we go over to the NDX, there's failures all over the place, folks. They just sold into this so quick and furious. It was pretty amazing, actually. The NDX 100, the high today was 41.90, and we're at 41.28 right now. Taken away from it on the way down, you have Express Scripts. That's down 275. Amazon's, ooh, baby, that's getting whacked. That's down $9 at 296. We'll go back to that. Netflix is off $9 at 317. Google's down 12. Putting juice into it, even though it's down, you have Staples up 51 cents. AMAT is up 64 cents. Vodafone's up 80. And Cognizant Technologies is up $1.20. If we do go back to Amazon for a second and take a look at Amazon, Amazon is out there at 297 and the 15th. There we go. Actually, the 24th. It's coming into the swing low of the 24th of October. That swing low is 284. That's going to go. It's going to get tested. We go to the Dow Industrials. We take a look at the Dow. Bringing the Dow down today. You have Microsoft is down $1. Home Depot is off 189. United Health is down 144, and Nike is down 142. Putting juice into it, you get 3M up 369. Boeing is up 292. Boeing is a classic. This is a dead cat bounce, folks. Boeing come out after the close last night saying that they're going to buy billions of dollars worth of their stock back. It's a monster ABC structure on the way down. Boeing had just gone from 135 down to 120. You get a dead cat bounce to 292. And what you're going to see here is Boeing's going to go after this 116 area. Then you got Chevron. Chevron's up $1.98. And bottom line, the same type of setup there. Chevron, the oils, the oil service integrators, all of the above, they're just in disastrous shape. This just had gone from 135 down to 100. So big numbers on the way down, in a huge way too, not in a small way. The oil market, CLF5. Now, what we have with oil is this: we hit today 53.60 and CL1. We're going to go into the continuous contract. What oil has been doing is making its way into its 2008 swing point. The top of that is 54.60. Now, we hit 53.60 today, and we did reject that number. So this is a start. That's what it comes down to. You know, we've been talking about, depends on how far you get into the bar. Well, we hit the bar. The top of that bar is 54.62. We hit 53.60. We rejected it. The keys now is going to be, will you get a sign of strength out of this? If you get a sign of strength out of this on oil, meaning wide price spread, accelerated volume on the way up, you'd buy the next retracement, and I suspect that that would be it with oil. We dig into that $54.62 more, guess what? That would be saying game action down to this 32.40 area. Thus far, it's done what it wanted to do, meaning got into that. But I wouldn't be diving in that market at all, because the way this market is set up right now is that the sell is on, and it's on in a heavy way, and you're talking about straight across all indices. Because something you want to wrap your head around now is this. September 19th, we were at 2019 on the S&P. October 20th, we're at 1820. At 1820, folks, the market is flat for the year. What you're going to see, this is the last week of trading before the end of the year. They're going to have until next week trading. You're going to see an accelerated type of trading here. Why? Because, bottom line is that we've seen it just the second time in 3 months on the way down. Money managers in general are getting paid to make money, not lose money. And I suspect what you're going to see is that they're going to unload just to stay flat and not go on the opposite side. The dip buying absolutely hasn't worked. The larger trend break on the S&P, first off, says we want to go to 1820. I can make the case, though, that bottom line is that we're going to be in for some heavy sailing down to 1390 on that S&P, because this is a much larger break to the downside. It's a huge break. We go take a look at some of the high volume stocks, and we do have high volume as we're heading a lower out here today, folks. You got Microsoft off $1, Facebook's about down 159. Facebook's been holding up big time too, pretty amazing. Citigroup is down $1.30. Let's go take a look at the XLF and see what we do have in the XLF. XLF, that's got light volume, but you're inside the lower trading range. Right now, the XLF, we're at 23.87. Well, 23.87 gets you inside that lower trading range. The markets in Europe had a bounce, but what we're witnessing right now is that this is going to be some major damage on the way down. Why? Well, what you do have is that you had the Dow up a couple $100. That's pretty intense. And in fact, it's going to end up being negative. The S&P, we had the S&P up to 2011. Right now, you're at 1978, and you are coming down with volume. This S&P wants to, we're down $5. It probably is going to end up being down $10, $15 coming into this close. So, you have a major failures all over the place. And as Mark in the Den, our bond expert, coming into the Fed meeting. The Fed meeting, check this out, folks. So the Fed meeting is tomorrow at 2 o'clock. In fact, let's go to Mark in Fort Collins. Hey, Mark, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day?
Yeah, great day.
Cool, man.
Always good to be 6 feet above ground,
That's a fact, man. No doubt about that, man. No doubt about that. So, you want to look at the TLT, huh?
Yeah, it's just interesting to me. I'm just kind of keeping an eye on it. No trading yet, but it is running up into that October 15th high with a lot less volume. I was wondering what your thoughts are on that.
Let's take a look. So we bring the TLT. The TLT, folks, is the 20-plus bond fund, and what you have is that the high in the TLT is 127.68. We've hit to 127.67, and yeah, it's a lot lighter volume. So that would be saying that, yeah, you can basically get a pullback. Now that, yeah, that's what it's saying, flat out. So, and that's a huge extension. What is surprising, I can tell you what's surprising. If I pull up the 10-year first, okay, the 10-year is under the 20 by a huge way. The 10-year, 129.28 was the high, okay, and we've only hit 128.12. 30-year, however, is saying that, number one, it looks to me like it wants to blow it away. So I'd still be careful. If you're going to trade the TLT, I'd wait for a pullback. I wouldn't go short the TLT.
Okay. Yeah, I was thinking if it hits that and closes under it, some lighter volume, I might grab some puts for January or something like that.
Yeah, I wouldn't be short bonds, man. I'd be long bonds in a big way. I'd wait for a pullback. But that's what makes a market, man.
Yeah, thanks.
It's a beautiful thing. You stay right there, folks. We're going to be coming back with our guest, Chris Gaffney. He is the Senior Vice President, Director of Sales at Everbank. He also helps write the Daily Finnick. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You get American Express down $1. We get Boeing up $2.80. Big Blue is down 85 cents. You get Merck up 35. Walmart's down 49. If we go over to Big Blue and take a look at IBM, folks, right now you have IBM trading at 152. This baby broke its swing point 3 days ago, has juice behind the move. IBM's off from that 210 high. And the way this is set up is pretty intense, actually, because the way that you do have this set up is that it looks to me like before, IBM wants to run down to 116, and you talk about a haircut. That's a haircut in an extraordinary way. Came off the highs with huge volume. And when you come off that high with volume, folks, let me tell you something. It's a big number. Tesla has basically come down about 30% also. 33% actually. Tesla's trading right now at 198, and slowly these stocks have just basically took off to the downside. Tesla's at 198 now. 181 is where Tesla, we'll see whether it can hang at 181. Tesla also has high volume off the high, and high volume off the high is a big problem. Now tomorrow at 2 o'clock, so the Fed meeting is tomorrow, and there's been a huge amount of speculation out there that they would change the language inside the statement at 2 Eastern Standard Time. We'll see if, in fact, that's how this thing is going to come down the pike, folks. What we do have worldwide right now, and you take a look at some of these rates, the United States right now on the 10-year is 2.0. That's the yield on the 10-year. France is still at 0.8%. You get Spain at 1.7. Bottom line, those are still steep rates that we have in the U.S. in correlation to where the rest of the world is. So I suspect that no matter what the Fed says, I don't see them taking that out. That's the bottom line. The last thing that they're going to want to do is throw more volatility into this market at this particular time. I'm sure that they're all sitting around right now looking not necessarily at our markets, but they are looking for who has exposure to the ruble coming down 19% in basically 24 hours. It's a big number, and as I brought up the last segment, it's amazing. I went over the long-term capital, and I was right trading my brains out on that long-term capital deal, so I remember it very well. But what I didn't remember, that trade was only $3.5 billion. That's unbelievable. $3.5 billion is nothing these days. If you're talking about on the wrong side of the trade, there's going to be trades out there that are hundreds of billions of dollars, not $3.5 billion. Tip money, as one of the Tigers say. It's like insane. Our whole banking structure, J.P. Morgan's probably paid more than $3.5 billion in fines this year. Bank of America definitely has, So the bottom line is, when you take that and put it in perspective, you can see what could happen, and it could happen very quickly. And it always comes out of somewhere that you're not expecting it. That's what it really comes down to. And what does happen is, once this expansion starts taking place downtown, banks, because they're such sharks themselves, meaning the large dealer banks, bottom line is that they'll find out where the loans are, what the loans are. And you know what is really intriguing? When we take a look at the bond structure, 2 years ago, that's when many companies start taking out U.S. dollar-denominated loans. And it's like, you got to be kidding me. I remember years ago this happened. And instead of dollar-denominated loan, folks, bottom line is that did put juice into our own dollar on the way up. They have to, why? Because in order to float the note, you need dollars. In order to pay the interest, you need dollars. Now what has happened is that you're going to see a default structure happen as they try to pay loans back. Why? Because bottom line, what you have there is that you have a structure that, in Russia's case, you're going to have to pay twice the amount of money back for any of those companies that took dollar-denominated loans, and there's going to be plenty of them. Why? Because they're in the oil market. The oil's still priced in U.S. dollars. Bottom line, they're going to have to pay twice back what they borrowed in rubles plus interest. You get some big problems out here. Fast currency moves are huge problems. Dow Industrials just went from being up a couple $100. Now they're down 1862. You're going to a lower low. Volume-wise, what we have out here is this. Is that volume? We're going to come in. Let's see. What time do we have? It's 3:40. We'll come in at about 900 million on the NYSE. If we take a look at the NASDAQ, NASDAQ's going to come in with some big numbers. NASDAQ's going to come in with about 2.3 billion shares. And the door's not big enough for folks to get out. That's what it's really coming down to. We're at 45.70. You're inside the lower trading range right now. Once we got back inside 46.10, which we did, that sets up that October 15th low. And that October 15th low is vicious. And the NASDAQ, that's 41.16. If you like the gold market, the silver market, the metal market, you want to get into that, or you are into that right now, folks, check out the special that we have on the front page of TFNN. Today was the 660th edition of the Gold Report. It was 12 and a half years. We have a special that's going on. You get 60 editions for $600. That's only $10 a week for the next 60 weeks. You also get a copy of my best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. That is an $88 value. That offer is good until the end of this week. So you have this week in order to get that. As we come into this close, you get the volume is expanding. And you know what's interesting, folks? Markets are never the same. They're always slightly different. But they always seem to come out of nowhere. How this corrections come down. And when they come down, they're fast, they're furious, they're all of the above, and that's exactly what we have here. This one here in particular, because you have the end of the year, you can get a very, very fast acceleration. And we'll see how they try to get control of these markets, because the bottom line is that there's no doubt in Russia, they just, can you imagine that you had a currency that goes down 19% overnight. Now, folks, let's go over to our man, Mr. Chris Gaffney. Chris is the senior market strategist at Everbank World Markets. And you talk about having someone on at the right time when you have currencies imploding across the world. Chris, welcome to TFNN.
Thanks.
Absolutely, man. Well, listen, I'm telling you, first off, thanks for being on. And folks, as you're listening and over at TFNN, you're going to see the Everbank banner on the right-hand side. Now, you can hit that banner, and you get to Everbank and hit investing. And right there, you're going to see foreign currency bank accounts, precious metals, market-safe CDs. So let's talk a little first, Chris, about Russia. And I know you're the strategist. You know a lot about currencies. How can something go down 19% in one night?
Well, it was an attempt by the Russian central bank to actually combat the negative sentiment in the markets on the Russian currency, and they raised interest rates. So they pushed interest rates up dramatically, and in an attempt to stop the free fall of the Russian currency. Now, what's led to the Russian currency falling is the drop in crude prices, along with the sanctions. Russia has really faced what many have termed the perfect storm as far as their currency, in that they've got the number one commodity that their economy depends on has fallen dramatically, at the same time as global sanctions have really taken hold. So this really put their currency into a free fall. The Russian central bank stepped in and tried in what the investors are now seeing as a desperate move to stop the fall of the currency with increasing interest rates. And in fact, we offer a a Russian ruble-denominated bank account here at Everbank, and we've actually had investors today calling in to see if they could take advantage of maybe the big drop in prices. So
let's talk about that. You know, it's amazing. I should have realized that. I was on the way to work this morning, right, and I'm saying to myself, I said, okay, we know that Russia has oil. We know that, you know, things are tough. There's no doubt about it. But I was thinking the exact same thing myself. I'm saying to myself, how can I buy some rubles?
Yeah.
It's not. I mean, you know, you don't have to go hand over fist. But the reality is that, you know, for the year it's down 52%. Overnight, 19%. So talk to me about how these accounts work, Chris.
Yeah, they're bank accounts denominated in foreign currencies. So we call them world currency access deposit accounts.
Yes.
The minimum deposit is $2,500 US.
Okay.
And we take your US dollars and convert them into foreign currency, or you can if you own euros or if you own Swiss francs, you can send those in and actually deposit the foreign currency into the account. We hold the account in an FDIC insured bank account, very liquid, and at any time you can call us and have us convert back into U.S. dollars or have us send out the foreign currency so we can send the foreign currency back to you. The access accounts are liquid. They're demand deposit accounts. So they do earn interest once they hit certain deposit levels. So it's a tiered interest rate structure. With the way global interest rates are right now, with how low global interest rates, most of those access deposit accounts currently are not earning interest. But some of the higher yielding currencies, Russia being one of them, you would earn, you know, an interest rate in that currency while you're holding it.
That is so cool. You have those. That's amazing. And if folks wanted to get one of these accounts, first they'd come to Everbank. Now, do I go under investing when I'm at Everbank?
Exactly.
Okay.
Or if you're interested in opening an account, enroll now or apply now. There's a button on most of the screens that takes you into our online application.
Right, exactly. Okay. And, you know, in that context, I was just bringing up, I see you also have a precious metal account, and it's really intriguing because when you bring up the Russia ruble in gold terms, it's just, I've been in this market for a long time, and I don't think I've seen gold go up in any type of currency terms. It's up 85% in 45 days.
Yeah, and we do offer gold, silver, platinum, and palladium. We have both unallocated and allocated accounts, and the difference there is in the unallocated account, you're just buying a number of ounces of that metal, and you're not specifying how that's being held for you. Whereas on the allocated accounts, you're purchasing, 5 gold eagles or 20 silver maple leaf coins. So you can decide how you want to purchase it. Both of the accounts are subject to currency fluctuation and are non-FDIC insured. So that's one of the things about the metals accounts is that they are not FDIC insured. But again, they are ways for investors to go right into the metals. You spoke about the Russian situation in there right now. The metals a lot of times are seen as safe havens for certainly inflation protection and a lot of times for catastrophe insurance, if you will. So we typically, when we see times of great volatility, you'll see people moving back into the physical metals, gold in particular.
What's amazing, Chris, is that, and folks, over the course of years, you know that gold is an insurance policy, no doubt. And it went from 282 in 2001 up to 1900 in 2012, right? And bottom line, I have a huge pullback. You could pull back to 1200, and even in that context, I think this is one of the first times I've seen that as an insurance policy, particularly because I remember when the Russian, if you weren't around basically 20 years ago, folks, what happened? People were billionaires in Russia, and then they were broke overnight. That was, what was that? That was like 4 weeks and 15 years ago, right? So it's like seeing this again. It's like, oh my God. I mean, because it can happen in more than one country.
Right, and we've seen a similar situation, in Latin America before, and certainly in Mexico we had a big currency drop. So, yeah, and it's not saying that gold isn't volatile. Also, as you pointed out, we've seen it drop also. But certainly, for the long-term investor, we preach diversification.
Sure.
We preach diversification. We think it's smart to be diversified into these asset classes, currency and metals. And again, we think it's smart to have at least a portion of your portfolio invested into those asset classes.
Now, can you talk a little bit about, and as you're over at Everbank, folks, you hit the investing tab first. And what you're going to see underneath that investing tab, you're going to see foreign currency bank accounts, you're going to see precious metals, you're also going to see market-safe CDs. Talk to me about how that works.
Our market-safe CDs are a fairly unique product, and they're CDs that with a $1,500 minimum deposit.
Yes.
And these CDs are geared towards a certain index. So, for example, the latest one we just got done offering was a BRICS basket, which the market-safe paid on the upside of the Brazil, Russia, India, China, and South African currencies. So
yes.
The unique part about the market-safe CDs in relation to the other CD products that we offer is that market-safe CDs are principal protected. You cannot lose principal. So they're typically longer-term CDs. This last issue we just did had a 3-year maturity. So
okay.
Your investor, the investors would buy that CD, and then at the end of 3 years they get paid the market upside of those 5 currencies. If those 5 currencies in fact drop versus the U.S. dollar, then you would actually get just your principal back. So if the average value of those currencies drop, you get your principal. So your principal is protected.
Is that? Right.
It gives you the potential for upside and protects you against downside risk. And so right now we don't have one. We're working on another issue right now. We hope to have one. If listeners just keep track of that investing tab, we certainly typically will put a banner out there and alert them to any new market safes that we have on. Nice.
Now, I'd like to go back to the currency, foreign currency again, particularly because, we've got different calls in here, and this is really the time of the year that it happens, too, because you have children graduating from high school, going to colleges, and, folks go to school overseas. I remember getting a few calls last year that people were saying, well, listen, man, my son's going and my daughter's going to school in Europe. How can I basically protect myself? And I actually had brought up your accounts.
Yep.
And that's really neat. And the aspect that when someone's going delta neutral, like if and what I mean specifically, folks, is that you wouldn't be trading it. What it is, you have a bill. If you're happy with the U.S. dollar, you say, okay, I pay that bill right now. Well, you can do that by transferring your dollars into the currency where your son or daughter is going to college.
Right. And that's what the big corporations do.
Sure.
That's what your big corporations do in hedging their currency exposure, and certainly you can do that. And you're fixing your costs, so you don't have to fluctuate with the market, and you don't have to worry about that $10,000 bill that you're going to get a year from now in Australian dollars. Is it going to be $8,000 as it is right now, or is it going to be $10,000,
right.
And so you can hedge that by buying the Aussie now, and then if that Australian dollar increases in value a year from now, when it's time to pay the bill, you can either figure out how to transfer the Aussie dollars if they'll accept Aussie dollars for payment,
yes.
or you can just sell it and book that profit and then turn around and pay your bill at that time.
Yes. And folks, if you'd like to read Chuck and Chris each and every day. You can go to dailyfinnig.com, and that's spelled DAILYPFENNIG.com. Okay, great commentary that they write every day. You know, hey, I was just reading what you had wrote up yesterday, and you know what's really cool, man? There's no doubt at the end there you're talking about, you know, do I want something that was made in China, or do I want something that, you know, bottom line, either you made, someone made, you knew, and that's real living, isn't it?
Yeah, and you know, one of the things that we talk about in the Daily Finnig is, again, you know, currencies are going to fluctuate. Currencies, they can be quite volatile, but
yes.
By adding them to a portfolio, it's going to actually reduce the risk overall, because they don't react the same way the equity markets do or the bond markets do. So again, you know, it's a way to actually decrease the overall risk of a portfolio. At the same time, you know, you can possibly get upside potential depending on what happens to the currencies. Right now, the dollar is strong, and it's been strong, but not against all currencies. And the Chinese currency is one that we've offered accounts in the Chinese renminbi for a number of years now. In fact, even before they started letting it float. And many believe that China is the next global reserve currency. Many believe that that's the way we're heading. And if so, I think it's smart to have at least some of your investment portfolio denominated in the Chinese currency. So that's one of the currencies that, you know, has been one of the better performers over the last couple of years.
Yes, and folks, the way that you can find out about the foreign currency bank accounts, the precious metal bank accounts, come over to our website at TFNN. You happen to be driving in your car, you don't have to write it down. It's everbank.com, or just go to TFNN. You hit the banner on the right-hand side. You bring it up. You're going to go right into investing. And right there, you get the foreign currency bank accounts. When you hit that, you're going to see that it says open now. And bottom line is that, you know, I'm going to see what this ruble's going to do tonight, Chris, but I'm telling you. No, seriously, you know, because, I mean, it's not like you have to throw a huge amount of money in there, but it's like, hold it, man. You know, Russia is not going to, you know, go broke.
Right, Tom. You know? I would say it's definitely a speculator's game right now.
It is.
Definitely.
It is. And that's okay.
You know,
right.
Yeah. But for $2,500 minimum, I mean,
exactly.
You know, as long as it's money that you
can lose,
you can speculate with.
Yep.
You know.
That's right, no doubt. Hey, Chris, thank you so much. You have a great holiday, a safe holiday, and we appreciate the update, and I really appreciate you coming on. This couldn't be a better day to get an expert in the currency market on in a huge way.
Thanks,
no
Tom.
doubt.
I enjoyed it.
Okay, man. Have a great one. Have a safe one. Market-wise out here, folks, okay, it's a beating. Since Chris was on, Dow's down 99 right now. Nasdaq's off 53. S&Ps are off 15. You're talking about big numbers, folks, okay? This is a bear coming at you in a vicious way. There's no two ways about it. Percentage-wise, the Dow's only down 0.5%. The Nasdaq's down 1%. From highs to lows, however, though, you are talking about swings like we had in 2007. The Dow Industrial is going to have a 450-point swing. Nasdaq, let's see, Nasdaq has big numbers. They're all big numbers, folks. That's the bottom line. Gold is holding up. Gold's only down $10 right now. And yeah, there's no doubt it's a little trader's paradise out here. There's no two ways about it. Volume-wise, there's going to be a high volume swing coming in, and this is going to be just like trading places. It's going to be turn those machines off, Mortimer. Turn those machines back on. Turn them back on. Bottom line is that they're going to be turned off, folks, and this will turn into a nasty open in the morning also, because you had a total sell-off 5 days in a row. You're down with volume, and this thing will basically open down big. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrial's down 106. Nasdaq off 55. S&Ps are off 16. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This card is by Norman Vincent Pearl. Never talk defeat. Use words like hope, belief, faith, and victory. Market-wise, let's take a look at it out here. We have the Dow Industrials down 111, NASDAQ off 57, S&Ps are off 16. All with volume, folks. So you talk about reversals, market can't hold highs. You talk about bear market action, it's all out here. Gold down $10.90, traded at $1,196 an ounce. Silver down 81 cents at $15.74 an ounce. Platinum down 10 at $1,198 an ounce. Copper off 2 pennies at $2.87 a pound. Light sweet crude flat at $55.96 a barrel. Bonds, you have the 10-year up 16 ticks, 127.24. 30-year up a full point at 146.02. Bottom line is that the 30-year wants to basically blow away. I suspect we're going to see it tomorrow or two. It's going to be really interesting tomorrow. The Fed has a meeting tomorrow. They come out with announcements at 2 o'clock. The 30-year is at its high right now. 146.16 was the high. Looks like it wants to blow it away. King dollar. King dollar down 572 ticks at 88.11. King dollar is going to go lower, folks. You get volume now off the highs. Euro up 75 at 125.13. Yen down a buck at 116. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. You're at 1975. You're on your way down to this 1820. Bottom line, market no doubt has got hit. The spread in the S&P out here today, folks, is pretty dramatic. You had 35 points. The S&P had traded almost up to the high of yesterday, 2016, then gave it up in spades. You hit a lower low, volume expanded as we get into that low. The door is not going to be big enough for everyone to get out, folks. We did 1 billion shares on the NYSE as we're going into lower price. Dow Industrials, we take a look at the Dow. The spread in the Dow Industrials today was almost 380 points from high to low. Pretty intense. The Dow had been up 200 bucks, got to 427, and it's closed at 068. You got to a lower low. Dow is on its way down to this 15,855 level. NASDAQ Composite. The Composite was the weakest index out here today. It did get the bounce in the morning. Bottom line, gave it up in spades. The NASDAQ had bounced to 645. That's 4645. Gave it up, closed out at 4547. Now the Composite, folks, this is the October swing low in the Composite's 4212. So you're talking about another 330 points down just to go test that level. Big number, big number. Gold contract. Volatility also in the gold market out here today. The high was 1223. The low was 1187. You're at 1196 right now. We've done 220,000 contracts. That is still going against its huge sign of strength from the first, which had 345,000 contracts. That's still saying gold wants higher price. I expect you want higher price. We can talk about the ruble imploding. Bottom line is that there's dislocations in the currency market, folks, and it's just starting. Oil. We go to the oil market with oil CLF5, what oil has done out here today. Oil got to the high on the continuous contract of the 2008 high bar. So bottom line, at this particular point, we'll see if oil wants to get into lower price. We hit 53.60 today. Bottom line, that may be it, meaning it tested that high. We'll see if, in fact, it is. And the way that you know that that would be a bottom in oil goes like this. You need wide price spread, accelerated volume on the way up, then a pullback with light volume. If we get into this bar a bit more, meaning the continuous contract today is at 55.96. The bar that we're talking about is the high of the low of 2008. That number is 54.62. We hit 53.60, but it did reject it today. The difference is that you get a wide-ranging bars. When you have a wide-ranging bar, you absolutely can get right into it. I would not be buying oil at all. Bottom line, make it prove that it wants to go to higher price first. If we go over to the 30-year bond, we take a look at the 30-year. 30-year still wants higher price. This is pretty wild. There's no two ways about it. We've done 437,000 contracts out here today, and it looks like it's an ABC structure on the way up. That's the way this is setting up right now. Volatility out here is going to be insane tomorrow. Why? Because we have volatility, number one, in the marketplace. Future market, you know, I suspect is going to gap down tomorrow morning. You have the Fed meeting at 2 o'clock in the afternoon. That's going to put more volatility into it. We go over to the King Dollar, and what we have with King Dollar is this. King Dollar did 56,000 contracts today, so now you're coming off the high with expanded volume. We get one more of these days with King Dollar getting expanded volume. That's where you would get a larger correction in King Dollar. Right now, the way King Dollar is set up is that you're at 88. This thing can come back to, you know, 80, now even 84. Come back to 84, 83. That would be a normal retracement in King Dollar, that it had gone up from 80 to almost 90. When you come off the high with volume and you follow through with volume on the way down, that sets up a much larger correction. Our phone number is 877-927-6648. Some of the high-volume stocks in a high-volume market on the way down. You get Apple down $1.53 off. We talk about Apple, too. This is where this is going to get wild. So Apple stopped selling online today in Russia, folks. And what that was all about is that Russia had imploded, their currency imploded by 19%. So you can imagine who knows what you want to buy something for. Bottom line, inside that context, you can see the type of implosions that can take place everywhere. Why? There's going to be defaults inside the oil market. There's going to be defaults inside currency trades in a huge way. In fact, let me just read you this one. Check this out. There was one oil company. So Forest Oil bonds plummeted after the natural gas and oil producer revised the terms of its merger with Sabine Oil and Gas to eliminate the need to repay debt at 101 cents on the dollar. So check this out, folks. This is pretty intense. This is a deal that, you know, one company's basically merging with another. They had a deal as of this morning, and this had been going on for a while. They were going to basically pay off $578 million of notes due in 2019. Bottom line, they decided to change the deal, and the notes fell in half. So if people invested in those notes, this is pretty sick. The notes were going for 86 cents this morning. By this afternoon, they were at 42 cents. That in itself is a lot of carnage, and I suspect that's only one we know about. There's going to be plenty of deals out there that we absolutely do not know about, and you know, we'll see where that shakes out. We go take a look at the XLE. We go look at the oil and gas service sector. What we have with the XLE out here, we hit a lower low. It was up 65 cents, but guess what? You have a lower low with volume expanding. And right now, yeah, this XLE wants to get it to $69. The XLF, the banking structure, basically out here today, pushed down. Volume wasn't that bad in the banking structure. What I suspect we're going to see in the banking, we're at 23.69. You got back inside the lower range, so we're going to be going after that October 15th swing low, which is 21.55. The real key inside the banking structure is who has loans out to Russian companies, who has loans in rubles, or no, actually, who has loans in dollar terms to companies that are doing business in ruble terms. That in itself, I suspect, is going to put huge selling pressure on some of the banks in the next 3 or 4 days. What we will see tomorrow and the next day inside, whether it's the Wall Street Journal, it'll be the Wall Street Journal, Bloomberg, they're going to be digging up the amount of loans, debt structure that is out there, and I'm sure they're doing it right now, in dollar terms that would have to be paid back in dollars, and they're doing business in rubles. Because just so you understand something, that would be paying double the amounts back. This is Tom O'Brien. This is TFNN. Dow Industrials finished down 111. NASDAQ off 57. S&P's off 17. We're going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 111, NASDAQ off 57, S&P's off 17. And, folks, as you're over at TFNN, don't forget we do 10 hours of live programming every trading day. We replay that programming. And as you're at TFNN, what you're going to see on the front page of Carousel today, you're going to see you can get 60 for $600. That's a special that we're doing. Today was the 660th edition of the Gold Report. You can get the Gold Report 60 editions for $600. That's a 50% discount. You also get my book, The Art of Time in the Trade, Your Ultimate Trading Mastery System. That is an $88 value. That special is good until the end of this week. So check it out on the front page of TFNN. Now we're going to go over to our man, Mr. Andy Hecht. And don't forget, every Tuesday and Thursday, Andy does an outstanding show right here at TFNN. 5 to 6 Eastern Standard Time. Great show. Also has a great newsletter. It's the Technomental Commodity Report. The way you get it, you go to TFNN, go to newsletters, go to trading newsletters. You can test drive that right here. Now, Andy is also an outstanding writer, period, okay? He's got some great articles out there. And today in the den, he's getting a lot of different articles. He's got an article out there about the gold market. And I'm just thinking that maybe Andy Hecht called the bottom and the minus today. We'll find out. Ah, Andy!
How you doing?
What's going on?
I'm doing good. I'm doing good. Actually, that article's an interesting piece. I mean, the point of that article I wrote today was that, you know, if you're interested in gold and you like gold,
right?
You know, buy gold. Don't buy not things that are searching for gold. Buy the gold that's already been found.
Right, right.
And that was my point to that piece.
No, listen, I liked it.
Cheek.
Listen, I liked it. I absolutely liked it. And I was trying to keep my mouth shut when you guys were in the den. Do you know what I mean? But I decided I'd leave it for your interview today.
That's okay. That's okay. Listen, people, I mean, I said in the article, people love the action. No. And there is action in the gold miners.
Hey, listen, man, it's heavy period because the fact is that, you know, the market, as you had said in the den, what Andy had said in the den, folks, earlier, is that the only thing that no doubt is out there that is going up is the volatility. And that's a fact. There's no doubt, man. You know, so
really, look, if you look at gold, it's really gone nowhere. The bulls are frustrated, the bears are frustrated.
Right.
You know, we're down like 1% on the year, by the way, in terms of commodities.
Yes.
That's a great performer.
Yeah, right.
I mean, it's amazing. And in euro, it's up on the year.
Oh, yeah. Well, listen,
and in ruble, forget about it.
I brought that, and I'll bring that up for you later, folks, okay? I brought the ruble chart up in gold in the last hour, and it's up 85%, which is just amazing, you know. But hey, you know what's crazy here, man, is that this currency, fast currency moves are pretty incredible. And you know, I was looking over that long-term capital, Andy. And I'm sure you heard me say that, but isn't it crazy that the financial crisis that almost brought down all the banks in 1998 was only about $3.5 billion?
It is amazing.
That blows my mind.
You know, it was heavily leveraged. It was heavily leveraged. But yes, absolutely. I mean, the numbers today dwarf the numbers just, you know, what are we, 16 years ago.
Yeah, I know. I mean, the banks have paid that much in fines this year. Never mind, you know.
I got another one for you to think about.
Okay.
Here. All right. So Mark Rich, the great oil trader who passed away earlier this year.
Oh, he was an oil trader too. I didn't.
Yes.
I know he trades everything, right? But oil.
Right,
okay.
No, but he was an oil trader.
Yes.
And he once said that oil is the blood that flows through the veins of the world.
Okay.
Okay.
Yeah.
And today, given the fact that oil has really ignited what's going on here,
sure,
the world's blood pressure has become unstable.
I like it. Yeah, no, you're true. That's true, man.
And listen, we gotta think about what happened with long-term capital management.
Oh,
here.
listen, man. If I remember anything, I remember that well because what happened, folks, is that I had been short the market anyway, and I remember Indonesia. And what happens in the market in general is that if you really start making a lot of money, you realize you're on the right side of the trend. But I'm saying to myself, man, this is like, you know, it's getting faster and faster and faster. And that happened for 6 weeks in a row. And that was before we imploded. You know,
Right.
That's how it went, folks, okay? So I know, we're down right now, but you got to be careful, man. Just get your stops in. If you're long and strong, just get your stops in. Forget it.
Right. You made a prescient point, which is you don't know where it's going to come from.
Right.
There's a lot of people. There's a lot of sovereign wealth funds.
Sure.
And it's taking a lot of risk. I mean, I was thinking this morning about I wonder what the positions at the Singapore Investment Authority are,
right,
at other places like this. These are people, the yields have been very low. People have been, in these funds have been struggling, looking for yields. For example, listen, Jefferies today reported a 73% drop in fourth quarter revenue from fixed income trading due to losses on distressed debt.
Yeah, they blew it.
And now they're looking to sell their beige commodity business. That means there's trouble there.
Yeah, well, you know what, and folks, okay, during the break, okay, so check this out. During the break, you had Finch downgrade the European Stability Fund. So check this out. We're talking about, yesterday they downgraded France, but now we're talking about they downgraded the fund that's supposed to bail everyone out, and Draghi hasn't even used the fund yet. We don't. The crazy thing about this fund is, like, do they really have money in it or not have money in it? Are they going to use it or not use it? Well, guess what? They just got downgraded.
It's unbelievable. Listen, Pete D's making a point here. He's saying the biggest hedge fund in the universe now is the U.S. Fed. Massive 88-to-1 leverage, $4 trillion dwarfs long-term capital management.
Yeah, but they get the printing press. So
that's right.
Yeah.
They do. Long-term didn't have the printing press. But we're going to hear from them tomorrow, and I would assume we're going to hear some very dovish talk from them, given world events. The question I have is dovish talk enough, or do they have to feel they have to make some action in these markets? I mean, things in the U.S. The U.S. is like an island of stability right now.
Well, you know what they might do, folks, okay? One quick way, what they do have left in their ammunition is to get rid of the Federal Reserve paying a 0.25 interest rate to the banks to lay their money in it, okay?
Yes.
Bottom line, they still do that. They can get rid of that tomorrow. And that'll blow people's minds, okay? I think they should get rid of it anyway. It's like really crazy, because that would push more money out into the marketplace. But that is that's the only real juice I see that they have at this particular point,
Yeah, that could really juice gold.
Oh, it would juice it big time. Huge.
Oh, big
Huge.
time. Yeah.
If they're dovish tomorrow, it's going to get juiced.
Yeah.
And
absolutely.
I can't see them not being dovish, but hey, we'll find out at 2 o'clock.
I can't see him not being. Listen, first of all, Yellen is dovish to start with.
Yes.
And given what's going on in around the world, listen, at first oil coming down is very good for consumers, and it's very good for the people that we want to see it be bad for.
Yeah.
It's like Putin's under a lot of pressure here. We see that with the ruble, with interest rates over there. Iran is certainly continues to suffer because of this. Venezuela. This is oil is much more than just a commodity. It's a political tool. Very interesting today. Oil closed pretty much around unchanged.
Yes.
Yeah.
But
the products, Tom, down 3.5 cents in gasoline today, down 4.5 cents in heating oil today.
Nice.
So the carnage continues.
So stay right there. We're going to bring you back, all right?
Sure.
Awesome, man. This is Andy Heck, Tom O'Brien. You stay right there, folks. We're going to be coming right back. We're going to be talking commodities with our man, Mr. Andy Heck. Don't forget, right after me, Andy's going to be coming up 5 to 6 Eastern Standard Time. Coming right back, folks.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 111, NASDAQ off 57, S&P's off 18. The Index 100 is down 76. Big numbers, folks. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. And don't forget, folks, at TFNN, Andy does a great show. It's every Tuesday, Thursday, 5 to 6 Eastern Standard Time. You get all that programming right in your cell phone, TFNN.mobi. If you'd like to get Tiger TV, just put TFNN.com. Go to the right-hand side to see the TV going. Hit that TV. You get the audio plus the visual. So we're talking commodities here, too. I see Reebok, right?
RBOB, gasoline.
Yeah.
Right, so I stuck a weekly chart of gasoline up here.
Oh, cool.
And so we can see it. It looks a lot like the ruble.
Yeah, it does.
Just over a little bit of a longer period of time. But one of the messages I wanted to put across there is I'm comparing what's happening in oil now to what happened in grains back in late spring, if you remember.
Okay.
And corn and soybeans and wheat all hit the skids and came way down. And what we saw at that time is we saw real strength in certain stocks. Archer Daniels Midland did well. Bunge did well. The companies that processed the grains did well. Now, oil stocks across the board, anything oil related has gotten killed here, Tom.
Yes.
However, I think that massacre will continue in the production companies, the exploration companies, the oil services companies that provide the rigs and that stuff.
Okay.
But the companies that transport oil, the pipelines, even the refiners and the marketers, they might do well because demand's going to pick up at lower prices, number one. Number two, crude oil's there's going to be a lot of crude oil moving around the world and put in storage here, and storage rates are going to go up. So you might see like a bifurcation in this industry. And there will be some interesting things. Pipeline stocks could be interesting here. Refining stocks could start getting, are a little bit oversold here. And certainly the transportation angle could be very, very interesting. I think China, I hear that there are so many super tankers steaming towards China now, so China could just fill them. The structure of the market is China can buy physical oil,
sure,
put it in a tanker, pay to store it, sell the futures against it, and actually make money while they sit on physical oil. It's a beautiful thing for them.
No, it particularly is when you have that kind of money, and you could do something like that, and you're actually a user of oil, folks, okay? You just have to be happy with the prices right now. That's what it comes down to, right? If you're happy with the prices right now and you use it, guess what? Even if it goes down, you're still happy with that price. If it goes up, you're really elated, right?
Exactly. It's an interesting market. We're seeing a lot of deflationary kind of pressures across commodities. Copper's coming down here. We're down below 288, which was the low we established in March. We're down below there. We're at 286.25 here. Base metal price, I think lead made a 27-month low today. Pressure in zinc, pressure in aluminum, pressure in all the base metals, continued pressure in iron ore. We saw silver really give it up here. The industrial precious metals are ugly. And if we look at intercommodity spreads, Tom, platinum and gold, same price.
That's crazy, right? And folks, okay, if you're gonna, what was interesting, Andy? I was checking on premiums yesterday, and the premiums in the gold market were big.
Well, that's a good sign.
It is a good sign. $65 on Eagles. That's a lot. That's big. And see, it makes sense though, because if you look at the spread out here today, folks, the spread in gold today was $35. So the dealers have to insulate themselves.
Listen, the other thing with gold here, Tom, is it's not out of the question with what Russia did this morning and what they did yesterday, jacking their interest rates to 17%. Stepping in today again, that they're selling a little bit of gold here. They've been buyers. It's possible. I don't think it's probable, but it is possible that there is a little official sector selling here to support the ruble.
Yeah, let's see how that would work. If you sold gold, you're getting dollars, then they got to...
And then they're buying, then they're supporting their currency.
And they're buying rubles with the dollars, right. Yeah, and, of course, rubles are cheap right now.
Right.
It's interesting. I was talking to Chris Gaffney from Everbank, and they have a ruble account.
I know, that's amazing.
How cool is that, right? I was coming to work this morning. I'm saying to myself, man, it's speculation, but bottom line, I'm saying to myself, hey, that's not a bad little spec right now.
You know what I love about Everbank? I mean, if you're, an independent guy like you, me, a lot of our listeners, and you don't have a $10 million account at Morgan Stanley or Goldman Sachs, they make a lot of products, particularly these foreign currency accounts, available to everyone. With very small, minimums, $1,500, $2,500 minimums. Yeah. You want an account like that at Goldman, man, you got to have,
Forget it. No, I know.
$10 million, $50 million bucks with them. So,
no doubt.
Great opportunities, certainly, to trade, and the volatility is there.
And if you didn't hear that interview, folks, okay, you can come to our website at TFNN and hit the Everbank banner, and you'd go to investing and then go to the foreign currency account. So they have a ruble account, Bottom line is that it's a $2,500 minimum, but if you think that the ruble is going to basically make any kind of a comeback in the next, who knows, 3 months, 4 months, 5 months, whatever, 6 months, bottom line, you could do that conversion. It's pretty cool.
Yeah. Mr. Putin's under a little bit of pressure, huh, Tom?
Oh, baby, man. Woo! I'm telling you, it's intense, man. No doubt.
The only thing that I worry about a little bit here is that, a KGB guy backed into a corner.
Right.
Could be desperate and vicious. That's a little bit of a worry.
He's a killer, man. There's no doubt.
Yeah.
There's no doubt. Yeah. Hey, listen, you have a great night. We appreciate the update. We're going to look forward to your show in 20 minutes, man.
Thanks so much. Talk to you soon.
Have a great one, man. Have a safe one. That's our man, Mr. Andy Hecht. He's going to be coming up with you from 5 to 6 right now. Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hi, Tom.
How you been, man?
Good. I haven't been around a lot lately.
Well, I know that voice. That's a beautiful voice, man.
Thank you. I've been. I got lucky last night. I heard the news overnight in the gold market, and what the Russians did with the ruble.
Yeah.
And that told me that gold was going to ignite and hit the shorts overnight, and I was able to get in overnight. And I actually dumped everything at I had my orders in this morning at about 12:19, and it went up to, 12:23.
Good for you, man. That's a beautiful thing.
There's no doubt in my mind, to make it as simple as possible, the Russians are selling gold right now. There's no doubt in my mind. That's the only thing that's valuable right now in their portfolio, and they have to dump it.
Interesting. Okay.
That's my opinion.
Yeah, no, that's valid. I get it, no doubt.
In fact, what I did, I actually went short at 12:08 this afternoon, and I'm waiting overnight. I think we're going to get a nice spike down overnight, but you got to get in and. Now, quick, as you know, you got to have your order waiting there.
Well, you better get out before the Fed has their announcement at 2 o'clock tomorrow afternoon. I'll tell you that.
Oh yeah, there's plenty of time because I have like overnight and I put my stops in. So
that's perfect. That's good.
You always have to stay ahead of it. Well, I have a question for you.
Yeah.
I just picked up your gold report.
Yeah.
And one of your stocks was recommended today to go long. And as soon as I got the report, I turned around, and it was like 47.54, okay? And your entry point was much less. My question is, how much of a lag time before the newsletter and the actual hit to the people is there? I know there was a big buy recommendation on this particular company today by one of the major houses.
Oh, was it?
Big time. Big time. Let me give it to you.
Upgraded Kenra. So who's this? Oh, Credit Suisse. That was at 03.
No. You the one I'm talking about? I don't want to give you your newsletter.
No, that's all right. That's all right, folks. What we bought on the gold report today, at basically about 3 o'clock, is what we bought Franco-Nevada. And the reason I bought Franco-Nevada, if you take a look at it, what you have is that you're coming into this swing point. You have 1.1 million shares, and you're going against 2.3. Franco-Nevada, bottom line is that it's the best royalty company out there, has 20 employees, and does $450 million in sales.
Yep.
And what I like about, not just about Franco-Nevada, I mean, this is an equity that I've been trying to get into for a while, is that this absolutely rejected the swing low, did it with lighter volume, and this indication of where the actual price of gold, what the collective mind is where the price of gold is going to go, because of the fact they make their money on the gross price of gold. It's a royalty off of that. So.
Yeah, but what happened was last night Morgan Stanley came out with a major buy on it. They moved their price target up to 61. They put a buy on your Franklin-Nevada, but they downgraded Royal Gold.
Interesting. That's interesting because that's so funny. Yeah,
and that's why Franklin-Nevada jumped it to 48 this morning.
Yeah.
But thanks for the time.
Okay.
And good talking to you again,
You
Tom.
too,
Keep
man.
up the good work.
Thanks so
Bye.
much. Have a great one. Have a safe one. You stay right there, folks. We'll come right back. Dow finished down 111. NASDAQ 57 down. S&P 16.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien. Welcome back, folks. We had the Dow finish down 111, NASDAQ off 57, S&P's off 16.5. And as you come over to our website at TFNN, folks, if you have an interest in the metal market, if you're in the metal market, we have a special that's going on. It's going to be over this weekend. It's 60 for 600. That is the 660th edition of the Gold Report. It was out today, 12.5 years. Bottom line, if you like those markets, you want to be in those markets, you have Tiger dollars, all of the above, check it out on the front page of TFNN. What you also get with that special is you get an autographed copy of my book, The Art of Time in the Trade, Your Ultimate Trading Mastery System, which is an $88 value. Now, let's go through these markets. We're going to go with the SPY first, the SPY. SPY had 248 million shares traded. That's after making a high, by the way, with 91 million shares. Excuse me, folks, the door is not big enough to get out. It never is. Bottom line, got a wicked expansion with volume. The low, October 15th low, is 181. We're going after 181. This market's not even down compared to what it wants to do right now. So if you think it's volatile now, folks, just stay tuned. That's your SPY. Your three Qs, the NDX 100, the Qs. The Qs came down today, monster volume, 64 million shares. That's after making a high with 17 million. Check it out, 17 million at highs. You come down at 64 million. Distribution been going on in spades. They sucked them in, took their money, and flushed them down the toilet. The Qs, you're at 99, 98 right now. That's going down to 90. The IWM, the small caps. Now, the small caps are the only indice that never made the high. Small caps are at 113 right now. That's going down to 103. Google, if you want to see how, what happens in all markets is that if you're going to highs and or lows, either one, you have some equities that get there first. Google just not only blew away the October 15th swing low, it like took it out like, it was just vicious, just teared it like a piece of butter. The low in October in Google was 518. Google come down $17.50 today. We're at 498 with 4.3 million shares. Now, when we take Google and we put this back a bit, you're going to see there's going to be some heavy destruction in these NDX stocks, folks. Google, and this is how Google likes to trade anyway, I suspect Google's going to run all the way back to 373. That's like a crazy number. Amazon, big problems. Amazon come down $11 out here today, 6.4 million shares. That baby, 227. So you get another $80 down. And Amazon had topped out at 405. Now, Amazon topped out the last week of December of 2013. Netflix, NFLX. Netflix, also huge problems. Okay, Netflix is down $10 today. You're at 316. And bottom line, there's going to be a lot of high-profile individuals inside the next Netflix deal that you'll be reading about that are going to be basically taking a beating. You're at 316 and 238 is coming at you. Inside the Netflix, let's see. I know Mark Cuban was out there saying he bought Netflix, but I believe that you still have... yeah, there it is, Kyle Icahn. Kyle Icahn, oh, there he is. Okay, so, hey, check this out. Kyle Icahn's been selling. Kyle Icahn's been selling. 9/30/14. 9, that's September, October, November. Yeah, he may, hey, listen, he might be out by now. The last filing, Kyle Icahn had sold 352,000 shares. He still had 1.4 million left. Tesla, yeah, Tesla also is down 33%, big number there. One of the first casualties, now this is going to be interesting, this just came across the tape. Let me find this right now because this was Tailspin, where is it? A Canadian company today got taken over by a Spanish company. Oh, here it is right here. Spain's largest energy company agreed to buy Talisman Energies today for 8.3 billion, ending its month-long search for acquisition to help boost crude reserves. But inside of this trade right here, what you're going to have is Carl Icahn was one of the largest owners, second largest owner, I guess, TLM. Let me pull this up. TLMCN. He was one of the second largest owners of Talisman, I believe. And when he bought it, yeah, he was. Okay, so he owns, Franklin Resources owns $133 million. But Kyle, his fund, okay, Kyle Icahn Associates owns $76 million. Now, that $76 million, even though they got taken over, is going to be a haircut of like $238 million. So the real, that's pretty intense, man. These guys can make money, but boy, oh boy, that's a big number. HLF, and see, these are the things that you just don't know how fast and furious it can go. Herbalife, that's been the dance that the Kyle Icahn and he's long, and then the other Icahn, no, it's not Icahn, but there's another hedge fund guy that shot, David Icahn. He's going to win the deal. Herbalife is down from $70 to $37, and if we bring this up and put this on a monthly basis, what you're going to see, high volume, spike low in 2012, and it's going right after it. So $24.24 is the next number down here. Bottom line, folks, is that if you're in this market, you've made a lot of money, and Ackman, thank you. So Icahn and Ackman. Ackman's short, Icahn's long. Icahn's going to lose that deal. Anyway, if you're long and strong in this marketplace, just put stops in. That's the bottom line. Don't let this go any further. You know, you can go over to the FTSE. What the FTSE did out here today, the FTSE is already into the 2008 swing point. I mean, October 15th swing point. Rejected price today, but FTSE's going to be right down here tomorrow. FTSE's going to go after this 6072. What you can expect overnight is monster volatility all over the place, okay? And this is bear market action. Last night you had the Hang Seng come down $375. That also is going into the October 15th swing low. It's probably the 14th there. It's October 3rd swing low there. That swing low was 22565. You're at 22670, and that's going to go after it tonight. It's going to blow this away tonight. Now, you can get a good gauge on this. Our man, Mr. John Logan, he starts us off at 8 o'clock in the morning, live. Check it out, folks, TFNN.MOBI. And you stay right there. Our man, Mr. Andy Hecht, is going to be coming up next, growling and prowling with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. You stay right there. Andy's coming right up. Wow! Go get him, folks.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.